the rise to $2,400 would not have happened if the banks, central banks, and the governments that have been keeping their foot on the gold price didn't want it to happen. I think it's now acknowledged that you've got Eastern central banks competing against Western central banks in the gold market, that the gold price is being set increasingly in the East, in Asia, where there's real physical demand from official sources. China has a lot more gold than it reports. I don't think a 1-month suspension of People's Bank of China gold purchases means.
Over 80% of central bank survey respondents expect reserve managers to boost gold holdings next year, per the World Gold Council. In 2023, China added 1,090 metric tons to its reserves, totaling over 2,200 metric tons. China, the top gold producer and second largest importer, bought more gold than all other central banks combined. Unlike most, China often secretly buys and stores gold without immediate declaration, leading analysts to speculate its true holdings could be more than double those of the US, possibly making it the largest gold holder globally. Increasing demand for gold in China, along with the country's continued purchases, helped push gold prices past $2,400 in May 2024. Chris Powell mentions that the recent rise in gold prices to $2,400 per ounce wouldn't have occurred if Western central banks had full control over the market. He points out the competition between Eastern and Western central banks in the gold market, noting that the price is increasingly influenced by the East, where demand is robust. This suggests a waning influence of Western central banks over gold pricing. Chris highlights the role of gold revaluation accounts, which some central banks use to adjust the value of gold upward and devalue currencies downward, helping to liquefy central banks facing debt problems. He underscores the secrecy surrounding central bank activities, particularly through gold swaps facilitated by the Bank for International Settlements, BIS, in Basel, Switzerland. These gold swaps move gold supplies among bullion and central banks to suppress gold prices. Despite these efforts, Chris suggests that the underlying market forces are too strong to suppress indefinitely. The increased gold swaps and rising gold prices signal that central banks' influence may wane, and a significant revaluation could be on the horizon. We will present clips from Chris Powell's interview with Soar Financially. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
We know the day is coming. The question really is whether we're going to live long enough to see the day of liberation of the monetary metals markets. Certainly the rise to $2,400 would not have happened if the banks, central banks, and the governments that have been keeping their foot on the gold price didn't want it to happen. I think it's now acknowledged that you've got Eastern central banks competing against Western central banks in the gold market, that the gold price is being set increasingly in the East, in Asia, where there's real physical demand from official sources. This is not what I think the United States and the Bank of England would have allowed to happen if they could have controlled it. I think certainly the BIS gold swap figures that got announced the other day suggest somebody is still trying to keep their foot on gold. There are indications. I mean, the gold researcher Jan Nieuwenhuis, who writes for Gainesville Coins in Florida, has been pointing out the central banks that have what they call gold revaluation accounts, and even acknowledge that the accounts can be used to revalue gold upward and devalue currencies downward, and to reliquefy central banks that have a debt problem. These things are turning up more often, indicating that central banks realize that the traditional purposes of gold include being revalued upward to reliquefy the governments that have gold reserves. In fact, the economists Paul Brodsky and Lee Quaintance wrote a paper, I think back in 2012, arguing that preparations for a revaluation of gold were already thoroughly underway in the central bank community in order to devalue debt, devalue currencies, and reliquefy governments. I see more and more evidence suggesting that Brodsky and Quaintance were correct, but I still don't think the United States is ready for that to happen yet. Somebody is doing a lot of gold swaps through the Bank for International Settlements in Basel, Switzerland, and these swaps almost certainly are used for gold price suppression, to move gold supplies around from various bullion banks and central banks into the markets where some tamping down of the gold price is believed necessary. And as our consultant, Bob Lamborn, who's the only guy in the world who studies this, as far as I can see, reported last week, the BIS gold swaps, which were heading down toward zero last year, they rose 40% in May from 78 tons to 109 tons. No central bank would be swapping gold unless they wanted to intervene surreptitiously in the gold market to tamp the price down. And that activity went up in May, according to the BIS's statement of account, which is on our internet site.
The People's Bank of China, PBOC, recently announced that its gold reserves remained unchanged in May, marking the first month without an increase since October 2022. There are several possible explanations for this. One reason could be the significant rise in gold prices, which might have prompted it to pause its purchases after substantial acquisitions in previous months. Another possibility is that it might intentionally send negative signals to lower the price of gold, allowing them to buy more at reduced prices. Furthermore, there may be other buyers involved that are not immediately visible. For instance, the sovereign wealth fund might also purchase gold. The China Investment Corporation, which does not disclose its gold holdings, might prefer diversifying its assets rather than concentrating solely on US dollars. The narrative suggesting that China's temporary halt in gold purchases directly correlates with the observed weakness in gold prices is viewed skeptically by many market analysts, including Chris. He argues that such interpretations are speculative at best and potentially misleading. Analysts like Jim Rickards and James Turk have long asserted that China does not fully disclose its gold holdings to international organizations such as the IMF. Instead, China is believed to hold significant reserves in various forms, including state banks and military holdings, which are not included in official reports. This opacity complicates efforts to accurately assess China's true gold reserves and their implications for global markets.
We had a big crash the other day, and now the supposed weakness in the gold price is being attributed to the announcement by the People's Bank of China that they didn't buy any gold last month, and that there's the report saying, well, China has paused its gold buying. That is a supposition up to the point of the ridiculous. Unless you're on the inside in China, you don't know what they're doing. For all you know, China could announce a 1-month suspension of its gold buying simply to discourage the market, to knock the price down a bit so that China and other central banks can get more of it at a cheaper price. I mean, there's a lot of disinformation, a lot of head fakes in the gold market. Jim Rickards and James Turk and other gold analysts have said for many years that China does not report to the IMF all its gold reserves, that it is holding gold at state banks and with the military, and not all of these reserves get reported by the People's Bank of China to the International Monetary Fund and the World Gold Council. China has a lot more gold than it reports. I don't think a 1-month suspension of People's Bank of China gold purchases means a damn thing. I go back to, I think it was 15 years ago, the Saudi Arabia Monetary Authority one day reported what seemed to be a huge increase in its gold reserves. And that was a bit of a sensation in the market. And finally, I think a reporter from Reuters got a hold of Mohammed Al-Jasser, who was then the head of the Saudi Arabia Monetary Authority, and asked him about this big increase in Saudi gold reserves. And the central bank president said, oh, no, there wasn't really any big increase in our gold reserves. We just had this gold in other accounts, and they were consolidating it in their report. You can go back even farther than that. There was a couple of years when the People's Bank of China didn't report any gold acquisitions at all. And then I think they reported in one fell swoop something like 1,500 new tons that they supposedly had acquired just recently. Well, they didn't acquire 1,500 tons just recently. They had it somewhere else, and they weren't reporting it. So central bank reports of gold possession have to be looked at very critically.
In the short term, gold prices are likely to remain under pressure due to rising treasury yields and cautious sentiment ahead of key economic data and Fed speeches. However, the potential for interest rate cuts later in the year and sustained central bank purchases indicate a bullish long-term outlook for gold. Share your thoughts on Chris's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.